Welcome back to Beyond the Paycheck. This is our third episode of our podcast and our first episode of 2026. We hope everyone has had a great start of the new year so far. And by the time this episode airs, we'll probably be about a month already into 2026, and that just feels unreal. Today, we're joined by a special guest, Christopher J., who is an active member of the Blossom community with over 5.6 thousand followers. He's also a good friend of JJ and myself, and we talk often, and not just about investing in finance, but topics outside as well. This episode is going to be very relatable and an interesting one for sure. We're going to dive into
Yep.
Chris's personal investing journey and how that's changed over time. So, Chris, why don't you start off by giving us or our viewers a short introduction on yourself, talking about who you are, what you do, how you came to know about investing, and yeah, how you got started.
Yeah,
Okay.
give us a little spiel.
All right. Well, thanks very much, guys, for having me on your show. I appreciate it.
Always a
JJ and
pleasure.
Leon, it's always nice to see you guys again. So my name is Christopher John. Those that follow me on Blossom um, can see my portfolio. I joined Blossom in March of 2024. I came to Blossom with about $115,000 in my portfolio when I started investing. Just to go back a little bit, I retired from my government job in October of 2019. I was 50 years of age. I'm 56 now. So I started up my own business, and those that follow me on Blossom know that I travel all over North America, escorting oversized loads. And so that business is going well. It's been really successful so far. And I love to travel, so it just fit in perfectly with my lifestyle. Um, with regards to my investing, well, let's see. I started investing um, in the late 80s, early 90s. I got into the markets with mutual funds like mostly everybody else did. I had a financial advisor, and that's a story in and of itself.
We'll
My
talk about
wife,
that.
we can talk about that later. Yeah, it
Yeah.
wasn't a very good experience, but nonetheless, I think those types of experiences help you learn and help you grow. So it certainly did for me. Um, I've lived through a couple, a bunch of market meltdowns, corrections. So I've seen the ups and I've seen the
Wow.
downs.
Okay.
All right, of the markets. Um,
hmm
since 1987. But I have to say that the best thing that has happened in my investing journey has been when I joined Blossom. Blossom has been a fantastic experience for me so far. It's a wonderful place to meet other people such as yourselves, to get investing tips and knowledge on investments and what's right for you, having a strategy, because I've learned so many different strategies, and if you follow me, you know I've been through a couple of them already since I joined Blossom. So um, I'm just really excited and happy to be here and share my experience with your viewers, and answer any questions that you might have, and we can take it from there. But once again, thank you very much for having me on. I appreciate it.
Yep, for sure. Well, so my per-
Oh my, we're actually live. What the heck?
I did see a live thing
Um,
in the top
I
here.
what the hell? Oh my god. Okay. I guess we'll keep going.
do we keep going?
You want to keep going or turn it off?
Oh, okay. Hey,
Let's.
let's just keep going. I mean, might as well, right? Because Sophia and Nicole are watching, so like, let's just keep going.
Oh, hi, Sophia. Hi, Nicole.
Wait, how are you live?
Yeah, it says live in the top.
Wait,
I think.
they're
Okay.
talking?
I
Well,
think
how
the
did
thing
they
because
see?
I just noticed a public chat, and then I just checked our YouTube feed, and apparently I'm live right now.
You
So
sure? You sure
that's
you want my
really weird.
first podcast to be live?
We're honestly like just keep going. So we're gonna repost this to as an actual video, so it's fine. Just keep going.
Okay.
Yeah.
All right. So should I go with asking question first, or do you want?
Yeah. Keep going. Yeah. Keep asking.
All right. So I know, Chris, you've had experience with covered call funds, and you've had them for was it a year, or
Just over a year, a little bit over a year. Yeah.
a little over a year? So
Yeah.
I was wondering about how your experience with them was, and like what made you get into them at first, and how do you think of them now?
Well, so when I first joined Blossom, I started out as a hybrid investor. I was into some growth ETFs, and then it was Perry and Paul that actually got me, and Adriano, should say Adriano as well, that got me excited about covered call ETFs. So I did a little research, and I'm the kind of person that when I see something that I like, I just go all in, I jump right in. For me, covered calls were relatively new in my investing experience, and so I wanted to see what they were all about. Now let's be honest. I was up to one point there. I was receiving almost was about $125,000 a year in income. I started out with your traditional high yielding, chasing yield chasers, I guess you could say.
We'll talk about that.
I quickly learned that that's not sustainable at all. And so, am I allowed to mention the companies that I was invested in? Like, if I was to say that Yield Max was one of them that I no longer invest in, would that be okay? You're not going to get sued?
No, I think it's fine. I mean, none of us are sponsored,
Okay.
so like whatever. Just tell it as it is.
Yeah. So, the yield
Don't
was
hold
nice.
back. Like
Don't hold back?
Basically,
Full
Cheryl's the team.
transparency.
Yeah, don't hold back.
Full transparency. Okay.
Full transparency, exactly.
Not a big fan of the Yield Max covered call funds. I'll have to admit right now. I was at first. I was wowed by the high yields of over 100%. 120% yields. But I quickly learned firsthand that those types of yields aren't sustainable. Obviously, something has to suffer, and there was huge NAV erosion on some of my covered call funds. I then got into really like Harvest. I got a shout out to Harvest here. Wearing my free hat. It was an expensive hat because I lost about $45,000 on Misty, so that bought me this hat right here.
Which Misty? The one from Yield Max or Harvest?
No, the one from Harvest, MSTE.
Gotcha.
Yeah, everybody's darling. Which it started out well. Obviously, the underlying is not doing so well, MicroStrategy, but for a time there, it was doing well, and I was making some good money, and the income was fantastic. It started out at 66 cents, dropped down to 60 cents, 55, 45, 30. What's it at now? 25 cents?
I think 20 cents.
20 cents?
I think 20 cents from the latest distribution, right?
Okay.
Yeah.
Okay. So, covered call funds, especially single stock covered call funds, it all depends on what happens with the underlying, right?
Oh yeah.
The exact opposite of MSTE was one I did really well in, was PLTE, Palantir, with Harvest. That one, I made a lot of money on PLTE, and I think the yield, the distribution is still at 60 cents, 65 cents on that one still, I think, if I'm not mistaken. But anyways, it hasn't dropped at all, like Misty has, MSTE. So I made a lot of good money on that one. The other Harvest ones I like are HHIS. That's been a steady performer.
It's been a beast.
It has been a beast. Yeah, it's been really well. And so
So far, right?
later on we can get into which ones I hold in my margin account, because the only funds I hold in my margin account are covered call funds, so that the income covers my interest expenses, which is
Right.
nice. Yeah. And so got involved with Evolve. So your standard covered call funds in Canada, you've got Harvest, you've got Hamilton, you've got Evolved, you've got Global X. 9 Point now is coming up
Yeah, 9
with
Point
some.
is in the game as
Yeah,
well.
ECHI is a fantastic fund. It's doing really well. Um, your HDiv with Hamilton and HYLD, those ones are doing fantastic. So I don't dislike covered call funds. I quickly learned that they're expensive.
You can honestly you can say if you don't like any product because the thing is.
Well, I
when it
don't
comes
like
to
yield
investing,
max.
like products.
Yeah.
Okay, fair enough.
I'm not a
When it
fan
comes
of
to
yield
investing
max.
I don't think most people enjoy their particular strategy, so I think it's okay
Yeah.
to there are shortcomings with regards to their strategy, which is
Yeah, it comes
reflected
down
in
to
their
the
overall
strategy.
total returns.
Yeah. I mean, I found that in the upper percentage for yield up and around the 60 to 80% was not sustainable at all. Huge NAV erosion. My sweet spot, and so I had to play around with it to find out which worked for me and which didn't. And I found, in my case, a yield between 15 to 25% was perfect for me. It gave me stable NAV. It gave me excellent distribution, and I found that worked quite well for me. It might not work for all your viewers and other different investment styles, but I came to the realization after being on the covered call train and passive income train for about a year. I made quite a bit of money, and I won't, I did make money on covered call funds. I got paid every day, so I was making income every day. There's a lot of work involved in that because you have to have your money working for you. You can't just let it sit there because if it sits there, it's not working for you. It's not doing anything. So there was a lot of maintenance involved with having many covered call funds in my portfolio. As I said, I was making about $125,000 to $130,000 a year. I was up to just under $10,000 a month in income. I think the highest I got to was $12,000 a month in income coming in. So there's a lot of maintenance involved in that. And what really was the deciding factor?
You constantly have to be rebalancing, right?
All the time. You have to, all the time. And I don't use drip, so I like to decide where my money goes. And so I was constantly buying things that, that had dropped. But in the covered call world, that seems to happen quite often. There was two main factors that I decided to get out of the covered call world, for me anyways. Number one was that I don't need the income right now. I'm fortunate that I have a good pension. I retired when I was 50 after 32 years. So I get I have a nice pension that covers medical and dental benefits for life. It pays well. So I don't need income right now. I'm not fully retired. I'm only 56, so I've got another 10 to 15 years before.
There you go.
Yeah. So I didn't need the income. And two was the wild swings of my portfolio. I mean, I'm talking up $17,000 one day, down $25,000 the next, and that I did not like. That was too wild for me at my stage in life, and so I sat back and said, "What are you doing?" And so then I changed. I'm still a hybrid investor, but if you look at my portfolio now, I've got some broad-based index funds like VTI and XEQT and VXUS. Really one I really like is Avantis US Small Cap, AVUV, because of the factor tilt. And Avantis is a really good company. I really like what they're doing, and so I'm involved in that. And then I've got my covered call funds. I've got my Utes with Evolve and my bank with Evolve. I've got HHIS. I've got ENCL with Hamilton. And I took your advice the other day there, JJ. On Friday, I offloaded 500 shares of HHIS and 500 shares of ENCL in my margin account because I was up there a little bit higher than I'd like to, be. So I've got about $70,000 in my margin account, holding covered call funds, Utes, HHIS, bank, and ENCL. For a short time there, I did have USA. You may have noticed from looking at my portfolio that I've recently jumped on the resource train. I've been a huge fan of silver. I've been stacking silver since the early 1990s.
Okay.
I think this is silver's time. Gold and silver, I should say, not just silver, but I have quite a bit of physical silver. I won't tell you where, but I do have I do have quite a bit. I think this resource train is just starting. It's just starting, especially the junior miners. The junior miners are just starting to get recognized, and a lot of the junior miners, especially in the silver market, are still mining. Okay, as you know, silver is a byproduct of other metals, gold and others. But a lot of these good companies, Canadian companies, are it's only costing them $20 to $25 an ounce to retrieve the silver. So there's still a long way to go in the resource sector. Industrial demand is off the charts. There's a physical supply shortage of silver. You take those three factors into account. I think this is silver's time to shine, and I think investors who are in the resource sector right now are going to do very well in the future. So you may have noticed, I've jumped on that train, and I have to give a shout out to. Can I give shout out to people?
Yeah.
I have to give a shout out. Well, besides you guys and my regular followers on Blossom, who I interact with and send me DMs, I appreciate each and every one of you. But I got to say, Besker Capital and Osmel and Neil Watson are the three that got me really excited about the resource. I mean, I've always been excited about silver to begin with since the early '90s, but but those three in particular got me really excited about resources. And so that now becomes half of my portfolio. I have growth, I have some covered calls, and now I've got some resources, gold and silver.
Hey, you're a true definition of a hybrid investor, right? So.
Yeah, we'll see how it goes. So far, so good. My portfolio just turned over just under $360,000. As I said, I started in March of 2024 with 115.
Wow.
And so I've been able to almost triple it in just under 2 years. So, and all thanks to the Blossom community. All thanks to the Blossom community, because I don't think I would have been able to do it on my own. So, this has been a wonderful journey. I didn't go back far enough. Back in 2012.
Okay. By all means.
You want me to go back a little bit further? Okay.
Yeah, by all means. Let's talk about more.
I won't get personal because I mean your viewers don't want to hear my personal story, but I started.
No. By all means,
I started.
You feel like you want to.
I started over again because life happens. In 2012, my mother had passed away, and I had gotten divorced from my wife, and so I started over with basically I had my job and I was able to keep my pension, but all my savings were gone. So I started over again with nothing, from zero, from scratch. This time that was the second time. The first time was in was it 9? It was 19 in the early 90s. Remember I said when I got into investing back in 1987, my wife and I had a broker. Yeah. Well, he's now doing 4 to 6 years in jail for fraud, operating a Ponzi scheme.
Wow.
And my ex-wife and I, we lost everything. We lost $65,000 that we had invested with him and his company.
Was it like a hedge fund?
It was
Or
he had me in, he had us in different funds.
okay.
It was Midland Wall and Capital when he first started, when I first met him, and then it went to Research Capital Corporation, and a lot of
Okay.
a lot of resource funds. He was based out of Toronto. But what he was doing was, it was a Ponzi scheme. He was taking money from one client and paying off other clients. Those that complained the loudest got paid first, and then at the end of the day, when the police went and arrested him and charged him, it was over $3 million that he had stolen from clients. We're talking about hundreds of clients, and
Wow.
yeah, so we lost $65,000. That was my first foray into investing back in
was
the
your
early
financial-
'90s. Yeah, that's how I
He was
started
your
investing.
advisor.
What was his name? I don't think I should mention his name.
No,
but-
I said he was your financial advisor.
Yeah, he was.
Oh wow.
Yeah, he was introduced to me from a
How
friend.
many financial advisors did you have from from all your
I didn't have another
experience?
one after him until
Gotcha.
I got into Edward Jones, which was after I retired in 2019. I got into Edward Jones again on another recommendation from a family member, and nothing bad to say about Edward Jones. It's a wonderful company. My financial advisor was great, but they tend to recommend companies and ETFs that benefit their company, that right, trailing fees and things like that. So I was with him for about 3 or 4 years, and then my returns weren't anything spectacular. There were
Do
some
you know how much
funds.
you were getting approximately?
So some funds I was actually losing money. And don't forget, this is during a bear market. We're in a bear market from when I retired in 2019. We've been in a okay, we went through a bit of a correction in 2022, right?
Right.
But even the returns on some of the investments that he had me in weren't doing very well. Like we're talking 3 or 4% gain. I think the maximum I ever made, percentage-wise, was probably 9 or 10% max,
Gotcha.
if that.
Okay. Okay.
Yeah, and so I did some more research, and I thought, you know what? Well, I can make that on my own. Why am I paying all these ridiculous fees, and not getting the return? I wasn't getting the return. I mean, I did that for 4 years, and so that's what essentially made me come to Blossom. That's the reason why. And since I've come to Blossom, I think I'm doing a little bit better. So
I'm pretty sure you are, especially since that you are putting in a lot more active research based
yeah.
on what you're interested in investing in, right? I mean, previously, I would say the only reason why you would want to have a financial advisor is number one, you don't have the time or energy to manage your own portfolio, or number two, like you just want like a second opinion. But if you're constantly able to keep up with it yourself, and by all means, it's not a bad thing to basically pay someone just for expertise, for like a consultation, for like an ongoing consultation from time to time, just to keep track with your financial goals, your non-financial goals, and everything else in between. But then if you want to take a more like step back approach and have someone actually manage your money all the time, then obviously there's going to be a cost to that, right?
Yeah,
So it all depends on whether that cost you're paying for justifies the returns and knowledge you're basically sacrificing in the meantime, right?
right. Yeah. So this is where I am today. This is where I find
That's
myself.
exciting.
Yeah. Well, I'm happy. I'm excited and happy to be here. I mean, Blossom has been the best thing for my financial journey, anyways. And so I'm not at that stage yet where I have to worry about how I'm going to draw down on my, my funds and things like that. So I have got.
You don't
I've
have
got-
to you don't have to worry about that ever. So
Well, I don't have to worry about. I've got some time, right? Like I'm only 56,
Okay.
so I've got some time
right.
to let my portfolio grow, hopefully to $1 million or somewhere around $1 million. I mean, that would be nice. I've got hard physical assets in silver that will help me, allow me to be very comfortable in retirement. So I'm not planning on selling my physical silver anytime soon. That will stay locked up in the vault. I still think silver has a long way to run yet. I still think the markets have a long way to run. Everybody says that we're due for a correction, but this isn't. I don't think this is the same as the last correction that we had. The metrics have changed. People say we're in an AI bubble now. Well,
We kind of are, but
we are. Okay, but I mean, TSCM
there's
just
no
came out.
denying that. That's for sure. Yeah.
No, I mean, TSCM, Taiwan Semiconductor just came out with their financials last week. They're doing spectacular.
Yeah, they're making money.
They're making money hand over fist. They're doing wonderful. What the emergence of AI? Well, what does AI need to survive? It needs data centers, right? It needs energy, right? And it needs silver. It needs a lot of silver.
It needs a lot of resources. And
It needs a
commodities.
lot of resources, and the resources in silver aren't there. If you follow the Chicago Mercantile Exchange, you saw what they did a couple weeks ago on a Friday after the holidays, late at night, where they bailed out J.P. Morgan to the tune of $18 billion. They raised margin requirements, and they've done it before in the past, and they'll do it again in the future. And then I posted on
Okay.
Blossom. I laughed because somebody at TDS came out publicly and said they're physically shorting silver, and then 3 days later, there's another article about the fact that TDS just lost over $600,000 shorting silver. Well, no kidding. Yeah.
Can you remind us, why does AI need silver?
Why does silver is a conductor
That's a
of
good question,
electricity.
actually. Yeah.
It's a good conductor of electricity, and so it's the best conductor of electricity, right? So we got solar panels. Silver will be used in solar panels. Industry demand for silver is off the charts,
Yeah.
and it will be for the foreseeable future. And there's not enough of it. There is not enough physical silver for the demand that's out there. China has put caps on export licenses of silver. I mean, all the pieces of the pie are starting to come together. We've been waiting for 30 years for silver to make its run, and I think this is actually this could be the time. Very exciting. I
saw a post. I don't know if it's true. They said like silver in the last 30 days has outperformed the gains of being in Ethereum or crypto.
Oh yeah, absolutely. 150.
I think it sounds about right. Yeah.
152%. I think
Yeah.
silver was up in 2025 152% for the year.
Yeah, something like that.
Yeah. Yeah. And there was an article that I posted on Blossom. There's a lot of well-known silver experts that post and have YouTube channels and things like that. And he's talking, the one fellow was talking, one I posted tonight is talking the minimum. He sees $250 to $300 an ounce for silver in 2026. The other expert, he thinks it's going to go north of 400. So,
Wow. Okay.
what would
And
that
as
be?
as a reference, what's it now?
$91. Hold on.
Yeah.
It's gone up over the silver futures have exploded overnight. It closed under $90 on Friday, but right now silver is trading at $92.85, up $2.80. Gold is at 46.61, up $65 overnight. Of course, the U.S. market's closed tomorrow, right? So
Yeah.
should be a quiet day.
Oh, gee. Well, what are your thoughts on gold then?
I like gold. Yeah, I don't hold enough of it. I wish I did. Back in the early '90s, I was in a lot of gold mining stocks. You remember Bre-X? It might be before your time, Leon, but yeah,
Yeah.
Briex is a well-known one. I did okay. I did well in that. Yeah, I'm
Briex is a gold miner?
It was. It was until the chief geologist jumped out of a helicopter and killed himself in Indonesia. It
Oh,
was a huge scandal.
damn, okay.
If you Google Briex, it was a huge scandal um, in Canada, and it took a while for a lot of people to recover from that one. But yeah, so I'm happy to be back into resources. I won't bore you anymore with it. I'm happy to be a hybrid investor, in the stock market. I'm happy to be involved in some pretty stable covered calls that pay decent income that more than covers my interest expenses in my margin account. So that's where I am right now.
Yeah, that's great. And so let's talk about more about the fact that have you always been a resource investor, both from a stock market perspective and like a hard metal perspective? Have you
Uh,
always just been a resource guy?
Yeah,
Ever
well, I
since
was
the 80s and 90s?
late 80s, early 90s. I was until the experience with my broker, my ex-broker. He was huge on the resource sector, and he got me into a lot of different resource stocks.
Okay.
Some did well, some didn't. He got me into Briex, and we saw what happened with that one. And so after that experience with him, and what happened is I kind of shied away from the markets for a while. I went back to mutual
Was there a
funds.
reason why? Was it just because
My experience with my broker,
okay.
who defrauded us of $65,000
Oh, sorry, just a oh, okay, so that's okay.
in the early
That's what
'90s.
happened with
Yeah,
that.
yeah.
When it comes to the Briex stock, were you able to recover anything, or did you lose everything? Like,
Yeah.
did Briex go bankrupt or something, or what
Oh
happened
yeah,
with
yeah.
that?
It ceased to exist. If you Google it, it's
Oh
a
wow.
Calgary-based company. It was a wonderful story. It was
Wow.
the largest gold mine resource estimate that time the world over, but it was a fraud. It was a huge fraud. So yeah, so I made some money on Briex. I lost a lot of money on Briex. Ultimately, we ended up losing our entire portfolio to his fraud of $65,000. So after that, I kind of shied away from investing
Oh, I
for a
see.
while.
Okay.
Yeah, I didn't want anything to do with it. And if I did have money left to, to start over again, I put it into mutual funds and didn't have to worry about it, right? So,
hmm
and then in 2012, I
That makes
started
sense.
all over again from zero. So, put my nose to the grindstone. I worked hard for the next little while and got to where I am in 2024 when I joined Blossom with $115,000 to invest, and I'm at just over 360 now. So hopefully that'll keep going up.
That's very exciting. That's a great progress from where you came from.
Yeah,
So
very.
big congratulations on that.
Yeah, thank
Yeah,
you.
I really applaud your resiliency, and it's amazing how you like almost tripled your portfolio since, right?
Just under 2 years. Yeah.
Yeah.
Yeah. Well, I've got the Blossom community and you people to thank. I mean, Leon, your portfolio is doing. Oh, JJ, your portfolio is doing awesome. I mean, you're two of the fellas I look to learn about covered calls. So, besides Paul Santori and Perry and Adriano
Yeah.
and a couple other uh, people that are big on covered calls
Yeah.
in the Blossom
hmm
portfolio.
Well, we're just sharing our journey, right? We're not licensed financial advisors or anything. So like,
No,
just
of course
do your
not.
own
I am
research.
now actually. So
How are you?
Oh,
Oh,
wow.
congratulations.
yeah,
Oh, good for you, JJ. Wow.
You got
yeah.
your
So I got the results.
financial
So
and the insurance.
yeah, financial and insurance advisor now.
Wow, nice, nice.
Well, then
So hey,
actually,
now is that there's now is that now is a great now it's a different change in title. So I guess when we post this video, the disclaimer will be slightly different. That
Yeah.
technically, technically I'm not your advisor. Like we're just
no.
sharing general advice. So clearly, this advice may not particularly relate to your like the general audience about who's listening to this, but take it as face value basically. So there. I mean, when it comes to YouTube and legal spiels, of when it comes to like the financial influencer community in general, I guess you always have to be careful with the wording. But yeah,
Yeah,
Nice.
I'm my own financial
Yeah.
advisor now. I mean, I see the
there you
benefits.
go.
I
Yeah,
see the benefits of both. Um, I think everybody should take an interest in their own portfolio. I think that's just why don't leave it to somebody else to look after your financial future. I think if you should have
yeah,
an interest in your own financial future. Um, but I do also I see the benefit of having a good a paid financial advisor that bring a lot of value to you and your family and your portfolio. I just happened to find the wrong one at the time. It's
yeah.
lessons learned.
When it comes to the overall like financial industry, there's a lot of good and bad, and most of the time, the bad ones probably overshadow the good ones because you always hear about the bad stories, right? So I would say with the amount of money that's inflowing and outflowing, just overall in this sector in general, it's kind of shaky based on where it is. But nonetheless, there's always there's always good and bad. So you just gotta be careful with who you're dealing with.
Yeah,
And yeah,
I agree.
frankly speaking, I would say the bad ones are probably not sharing their content on YouTube. So I take that as a general guideline.
That's a good point. Yeah, yeah.
Right? Because they want to. I mean, as soon as they broadcast what they're sharing, that I mean, it's kind of hard. It's kind of hard to cover up, right? So there's
When he
that.
starts his podcast from his jail cell, then I'll have concerns. I don't think he's I don't think he's in jail
That's a
anymore.
fair point. Yeah.
Yeah, I think he's released. I think he got released. He'd be on parole now, or anyways. But I want
How long?
I want
How long did he get in jail? Like 20 years.
he got
25 years?
6 years.
Only 6 years?
Only 6
Wow.
years. Yeah.
Okay.
Yeah, and we're talking $3 million he defrauded. Now he had restitution orders. He had to pay a lot of that back. Whether he did or not, I don't know. I don't follow it anymore. But yeah, six. Would you do 6 years in jail, JJ, for $3 million? I don't know if I would. I don't know. No, no, JJ's frozen.
Grantedly. Oh, Am I
think
back?
Yeah.
Yeah, you're back now.
I'm back. Okay, yeah. So granted, frankly saying, there are so many legit ways of making money, and honestly, when it comes to the overall financial sector, like ethics and morals are probably a big thing because, I mean, if I mean, it's supposed to be such a right now it's a highly regulated industry. There's so much compliance, there's so much ethics, and there's so much stuff you have to go through.
Yeah.
Like, if something happens, you're kind of screwed for life. So, I mean, don't take the chances. It's not worth it.
No.
It's really not. Unless you plan on not staying in Canada in general and going somewhere overseas. But
Yeah.
I don't know.
Unless you flee to a
For me, I don't think it's
non-extradition
worth
treaty,
it.
unless you flee to a non-extradition
Probably,
treaty
yeah.
country or something. But no, for me, it wouldn't be worth it either. So
Yeah.
yeah, I'm happy doing it through hard work and dedication. So that's the way I am. So
Good for
That's
you.
it.
yeah.
Well,
So how are you finding your overall financial industry right now, Justin? Your overall financial journey so far. Let's talk about a bit more of like some of the hard lessons that I guess that would be more geared towards what beginners can take away, like those who are starting, those who basically were in your shoes, those who got, I don't want to say scammed, but those who got bamboozled by whoever they were learning from and restarting again, and just those who are just starting from scratch, or those who are restarting but have that sort of fear built in place, either based on their belief system or based on past history. So some of those key tips, what you think could be useful.
Well, the one thing that I learned right off, and it didn't take long for me to learn it, was don't chase yield. Uh, the
Big
you
one,
know,
right? Yeah.
yeah, that was a big one. If it sounds too good to be true, it probably is. Uh, know what your expenses are, the management expense ratios, the fees that you're paying um, before you get involved in any of the funds. Do some comparisons. Um, the big one for me that was the huge learning experience was the difference between high yielding and NAV erosion, and I quickly found out uh, very quickly how high yield is not sustainable. Extreme yield, I should say. I mean, like I said, I found the sweet spot for me was between 15 to 25%. Um, those yields generated a lot of
I
income
would
for
agree with
me.
that. Yeah.
But when you start getting up over the yield max type yields of 80 to 100%, Perry calls those juicers. You don't want that to be the main focus of your portfolio at all, ever, no way whatsoever. It's not sustainable. And um, I don't think now I would invest in single stock uh, covered call ETFs um, if I was going to get back into the passive income. So I did learn a lot about passive income, which was great. I think passive income. I'm not against passive income. I was a passive income investor for over a year, and I made a lot of money with passive income. Um, but I also lost a lot of money too. So um, I think there is a place for passive income. I'm just not at that place yet. Um, those that are retired or need income to live off of month to month, absolutely. There will always be that debate between the growth versus passive income side about which is better long term. Total return matters. You've heard that. How many times have you heard it? It's true. Total return does matter. But people have different needs depending on their financial journey, depending on their lifestyle, depending on their age. Everybody is different. And so let people uh, decide for themselves which path they want to take. There's more than enough people on Blossom that will give cold hard facts on the benefits and the tribulations of a certain investment style, growth versus passive income. I don't knock either one of them. I can only tell you my experience having gone through them both. And for me now, a hybrid investment suits my needs absolutely, what I need right now, and it's working out well for me so far. So I'm gonna keep it going.
Yeah. Everyone's
That's amazing.
investing
Yeah.
journey or everyone's portfolio should be tailored to themselves, and whatever strategy they pick, growth, income, or a bit of both, it's like it should be personalized to them and fits their own needs, like you said.
Well, absolutely, because financial investing is a personal journey for every person, right? It's their own
Yeah.
personal journey, and so you have to do what's best for you and your family, but you need a strategy. Research. There's all kinds of information out there now. I wish the information that's out there now, especially on Blossom, I wish I had that back in the early 90s. My investment style would have been a lot different had I had access to that type of information that's available now at a mouse click away. And
Yeah.
so, right, there's so much information out there that can benefit you as as an investor. Um,
Yeah.
and so take use of it, take advantage of it. Learn from other people, watch YouTube videos, watch live podcasts about, from not from me, but from experts in the field. I'm no expert. But there's just so much information.
You are an expert in your own game. So yeah, call it that. Come on, take some credit.
In my
You've
own
been through
mind,
so
I'm
much.
an
I mean,
expert.
you kind of are an expert at yeah.
I'm an expert at losing money. I'm an expert at winning money.
Fair enough.
Yeah.
Yeah. And so, what's the role of cover call funds now in your portfolio? Because you did
That's a
mention
good
that
one to
you
talk about. Yeah.
still hold some, right? And
Yes.
is it just in your margin or where is it?
Let me just pull it up here. Yeah, no, I only hold covered call funds now in my margin account. So margin investing is relatively new to me, but it is another tool in the toolbox of investing.
Here, we're gonna do it like this.
Oh, okay, perfect. There you go. Okay, so
Is that visible?
that's
Like,
visible. Yeah,
how
I
is
can
this?
see it.
How's okay?
Yeah.
Yeah.
So if you go through my portfolio, the covered calls, you got Utes, you've got ENCL, you've got HHIS, and bank. Those are the only four covered calls that I hold in my in my in my margin account. Let me just.
Okay, yeah, I see them. Okay, yeah. So you have Utes is the top holding right now, and then you have ENCL, and then HHIS, and then oh wait, I think I passed it. Yeah, bank was up there somewhere. Yeah, looks
So
about right.
I'll just bring it up. Yeah. So I got about 60, just under $64,000 in my margin account that I'm using. It's linked to my TFSA.
Okay.
It's linked to my TFSA on Wealthsimple.
Okay.
But so far, the only one that's not doing that isn't in the green is HHIS. But I'm not down a lot on HHIS. I'm actually only down $200 on that one. And Utes, it's not even
Price
it's not even worth it. $65.
wise or total return wise?
Monetary wise.
When you're saying you're down, like are you
Down
like stock wise basically?
stock
Stock
wise,
price
yeah.
wise.
Stock price wise, yeah, yeah, yeah.
Stock price
But-
wise. Okay. What about total return wise?
What has HHIS done over the?
I think if you click
I would
on it-
say in the past year, HHIS has been more or less flat, like price wise, based on
Yes.
its launch price. And so, I mean, its distribution rate has more or less been in between that 20-25% range, which means that based on the flat stock price, um, total returns, total returns before taxes, because now I think when it comes to these cover call ETFs or anything that produces income and that's distributed, I think there's another metric that investors need to be aware of, which is number one, which is nominal returns prior to tax deduction, which is what these companies are basically reflected on their stock charts, right, on their performance, because everything that they show is prior to tax deductions. Because when it comes to each individual investor has a different marginal tax rate, which means that they're all going to be taxed at a different rate. But then you also have to factor in, had you been better performance wise investing in these call for call ETFs, keeping in mind that everything is realized, which means that if everything is in a non-registered account, part of it, excluding ROC and return of capital, that would basically, there's going to be a tax drag factored in. So now it gets a bit more complicated. That's why every time we refer to tax total returns, it's always going to be prior to tax adjustment. So that's
Right.
something else that people need to be aware of,
Yeah.
right? Because everybody's also in a different tax bracket when it comes to financial planning.
Right, right.
So
Yeah.
Well, I mean, I can't say
another
that
keyword, another key thing to think about. Yeah.
my distributions more than 6 times cover my interest expenses in my margin account. So I think with Wealthsimple, the distributions that come out that get paid monthly go to pay the interest first, and then
Yes, that's correct. Yeah.
whatever's remaining just gets added to your non-registered margin account, which since my non-registered margin account has been going up every month, I think I'm doing okay in that regard. But I did take your advice, JJ. I remember you had said that I was a little bit too heavy concentrated in HHIS in a friendly chat.
Because
not
remember
financial
HHIS,
advice.
when it comes to HHIS specifically, just remember that based on its current allocation, it's very tech and AI heavy, which means that as long as the tech and AI surge is continuing, then HHIS, because it follows all those holdings, more or less. Okay, it's not gonna be one to one. Like the beta is not gonna be one to one, but it's gonna be following more or less the overall tech and AI sector, pretty close stock wise per se. And so, while it is doing well for now, there may or may not be a correction coming forth at some point, which means that if you are super concentrated in just HHIS, that's going to get reflected in the amount of margin you're going to be susceptible to getting margin called.
Right.
And also the fact that because your TFSA is collateralized against your margin account, it also depends on what is inside your TFSA and how strong and how diversified and how solid and how defensive those holdings are. And so everything comes into perspective of now it's not only the fact of what you're holding inside your margin account at your one percentage at one margin requirement for each individual holding, but also depends on what you are holding inside your TFSA account that provides that amount that you're allowed to borrow against. So that's something else you have to factor in, right? Because margin, it seems great. It's very easy to have access to at the very beginning, but the nuances and the tricks that you have to keep in mind, that's an ongoing process that you always have to tweak. So
So when I was doing my research on margin, I wanted, especially at this stage of my life, there isn't anything speculative, there isn't anything high risk in my margin account. The four ETFs that I hold, HHIS, ENCL, Bank, and Utes, especially Bank and Utes is a defensive ETF that does really well.
That's correct. Yeah.
Bank has been consistently steady. It trades within a well-known trading box. The same for ENCL. Might be a little bit more risk involved with ENCL, being an oil and gas.
Yeah.
But it has consistently traded within the last 2 years between in the 17s to the 19s. It fluctuates. Pays an excellent distribution at 26 cents a share. HHIS pays 27 cents.
Yeah.
What is HHIS and their 18 single stock holdings now? I wish they'd get rid of a few of the single stock in HHIS, but it's been relatively stable. It pays an excellent distribution, and that's exactly what I was looking for in my margin account. So,
HHIS holds 19 individual stocks, but I saw that Harvest just launched like 5 or
6, yeah.
6 more
Six
new single stock.
So
6 new single stocks, yeah, this week.
maybe they'll be added to HHIS. Who knows?
Well, I mean, let's look at what the new releases are. I'm just gonna pull up the.
There's
information
JP Morgan.
Yeah, I did read something about that.
Yeah. But yeah,
So there's Block, there's CrowdStrike, there is JP Morgan, there's Johnson and Johnson, and then there's Novo, and then there's Oracle.
okay.
Oracle,
So-
right? Yeah.
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 So when it comes to this list, even assuming that all 6 of them are added to HHS, that's gonna be 25 holdings then. But then still, if you look at the breakdown, we're still about 80% roughly tied to AI and tech. So it's not that diversified
No.
yet. So
No.
it's still, but the majority of its stock price is still related to underperformance of the tech and AI sector.
Right.
Right.
JJ, somebody has asked you a question in the. I'm not the moderator, but I just noticed it. So Zachary asked you a question. Hi, Zachary. Thanks for being here.
Well, like look at
I'll answer it. I'll give him a response on Blossom. So
Okay.
yeah.
looking at the total returns of HHIS, like I did it a few days ago, and yeah, it's been like around 23-24%. So
That makes sense, right? Because the
Uh,
distribution rate is in that lane. It's more or less in that. It's more or less that, right? It's because the stock price has been more or less been flat. So
Yeah.
the distribution. So the entire total performance is based on the distribution. It's done, and it's more. It hasn't changed, if I remember. It's always been consistent, or in that 22 to 25% range. So it makes sense that it's there.
Yeah.
Yeah, HHIS. So year to date, it's up. Well, not very much, 1.72%. If we do 1 year return, 26.53%. I think the, I think the benchmark, if you want to compare covered call ETFs, I think HDIV by Hamilton is the base is the what do you call it?
King?
Is the king.
The king so far?
Is the
Yeah,
king so
I mean,
far.
it makes sense, right? Because, I mean, what does HF hold, right? Because
40%
it's financials, it's
financials.
it's financials,
Yeah.
it's commodities, it's oil. Like, come on, they've all done so well. Like, frankly speaking, they've done better than the Nasdaq, right? Because the benchmark of HHIS is more like a concentrated Nasdaq, and so all of those commodity holdings that are inside HDIV, well, just this past year, it's done better. So it kind of makes sense that it's gonna be better, right? But I mean, from a long term perspective, will commodities always outperform tech? Well, maybe, maybe not. It kind of goes hand in hand, right? So it's always good to own both, rather than just picking and chasing one sector after it's performing well, because you're basically catching. You're kind of chasing highs, but then you might not always get that performance. It all depends on it all depends on your convictions, right? As
Yeah.
we
And
always
I've held
refer to.
I've held HDIV in the past and done really well. It's 36.67% so far this in 1 year, which
Yeah, it's great.
which beats HHIS and it beats Biggie, it beats Canny. ECHI is doing really well with 9 point. I was excited about that one. It's too bad I didn't stick around in passive income investing to see how that would go. But I mean, I still follow the passive income crowd, and I keep up on the the ETFs that I have interest in.
Yeah.
Would I add it to my one of the main factors in that I said to myself when I started and opened my margin account is I wouldn't margin requirement of 30%, nothing higher. I don't want 50%. I don't want 75%. I don't want 100%.
Didn't you start with 50% when you
I
started
did.
with own margin?
I
Let's talk about
started
that.
with the Daymax series, S Day, Q Day, C Day, and they're still 50%. They're still 50% margin requirement. Now they'll eventually come down to 30%, but if they because they pay twice monthly, right? By monthly, so
Semi-monthly, yeah.
semi-monthly. So if the Daymax series ever comes down
Did
to
you have
30,
Biggie in there as well? Because it's also semi-monthly.
I didn't. I had not in my margin account. No.
Okay.
Biggie hasn't done 1 year return on Biggie is 0.87%. It's not doing very well. Biggie's not doing very well.
Well, it just released a few months ago, and also it's even more concentrated than HHIS in tech, right?
It
Well,
is.
I mean,
It's
20% or more is in strategy and Coinbase.
Yeah.
And
That's right, yeah.
They haven't done well. So
No.
Yeah. So
Yeah, 3
Like-
months. Three
kind of
months.
expected, right? So
3 months minus 3.49% for Biggie. So yeah, it's got some work to do.
well, like when tech rebounds, like maybe like Biggie would be in a better position to capitalize on that reversal if it happens, right?
Yeah, I think you're right. Yeah.
Yeah. So
I think that also depends on their calls and how out of the money they are. Because when it comes to Biggie, their leverage is higher, but their call ratio, at the money call ratio, is also higher.
yes.
And so plus the fact, so they might get they may or may not get capped out. So that is something we're gonna have to that we're gonna have to watch long term and see from from that angle.
Right. Yeah. So now my focus, I think I said in the beginning. Now my focus is on growth stocks, and now resource stocks, gold and silver. I think we're just starting. We're just starting to see the results in the resource sector, and I think 2026 is going to be a good year for resources, gold and silver. I mean, 2025 was spectacular for silver and gold already, but
For sure, yeah.
100%. But I still think we have a long way to go. So
You're making me want to get more bullish and buy a silver ETF now.
yeah,
Leon, FOMO. Don't forget that.
yeah, that's right. That's big. It's huge. It's huge. But if you look at
Unless you have strong conviction, like long-term conviction in the commodities, go for it. But if you don't
Yeah.
stay indexed, right? Because the more concentrated, the thing is, like, if you want to be more concentrated, then you damn well be sure of those convictions, and you damn well need to know the ins and outs of those concentrations. You need to do way more research. But
Yeah.
do you have the time for that? Right? It's a trade-off versus because the more concentrated you get, by all means, like whether it's a covered call or a non-covered call, they're all the same. The more concentrated of your portfolio gets, the more active research you need to do to keep pace. Whereas the less concentrated you get, the more diversified. Sure, you're not gonna get the amazing performance because everything is taken on an average. But that also means you're way more step back. Like you're taking like a hands off approach based on. So it all depends on whether you want to be more hands on or more hands off. So it all depends on that, right? It's a trade off ratio.
just looking at your portfolio, Leon. So you're big on Estee. That's your biggest holding in your portfolio. You like Estee?
Yeah. I like Este. Yeah, it's pretty nice because I really like the Daymax funds because it's really unique how you pretty much get 100% like uncapped growth on the main holding, which is the 25 dividend stocks, and then the income is from the cover calls on like the index like VU or something, right? So
Right. Yeah. Yeah.
I
I
think
was
it's
a.
really unique strategy.
I'm a big fan of the Daymax series. I just wish Wealthsimple would lower their margin requirement on
Yeah.
that.
They could actually they are a good choice in your TFSA, right? Because they're more stable.
Yes.
Yeah,
Yeah.
but not necessarily directly in your margin account. So,
No.
yeah.
Yeah. And yeah, because basically it has a 25% rate coverage ratio, right? So it's not a aggressive strategy, so that's why you still get get like the full growth from the underlying dividend companies, right?
Right. Yeah.
Yeah.
And you're still holding Misty. Good for you. I applaud you for that.
Yeah, I'm
Good
still
job.
Hey, he has strong conviction, right? Whether or
Yeah.
not
Well, if you think
whether or
Bitcoin,
not it works out.
if you think Bitcoin's going to do well, I see Bitcoin's recovered quite a bit. It's got
Yeah, I
back in
don't
the
think
90s.
Bitcoin's going anywhere, and yeah, I still have conviction, and I'm just holding it. It's still paying me. There's not really a point for me to sell it unless I see an opportunity elsewhere. But like, if it's not causing any big issues, I'm perfectly fine holding it and still getting paid every month from it, right? So that helps.
Excellent. Good. And JJ, what
Yes.
about you? How are things going with you in your portfolio?
Doing some minor rebalancing here and there. I mean,
I did notice.
stuff for you too, basically.
Okay.
Yeah. I mean, now, like every decision you have to make, you kind of be like, okay, can I capitalize on these decisions and make a video out of it? And so, what I've gone ahead is, when it comes to the main margin account, it needs to be as hands off as possible because I don't want to be babysitting that too much. But then
Right.
when it comes to a separate, because I have a separate margin account that I opened in my partner's DFSA, so that's like a separate kind of case study portfolio, and so I will actually be documenting like a first launch of the case study pretty soon. I would say like a road to 100,000. Basically, people can follow along, see what I'm putting in both the TFSA, which is gonna be the collateral against the margin account. There's nothing in the margin account right now, but it's all just TFSA. It's about $10,000 worth, and so building it slow and steadily to get that $100,000 point. Basically, a toned down version of Gary's $1 million portfolio to go in less than 5 years.
Yeah.
I would say it's more relatable because what he has is a crap ton of 80% in MSTE, and then you
Saw
also have
that.
small amount in XUS, which is just your typical vanilla S&P 500 from
Yeah.
BlackRock, and then HDIV, and then a small percentage in cash. So it's about 80% MSTE, 5%, 6%, 7% in HDIV, 7% XUS, like 3% in cash. So rather than going down that route of what he's doing, it's small case study. I would say it's more relatable to people, just building out their portfolio from scratch and follow along
Well, I
that
was
way.
actually surprised when I first saw him. I like Gary Gill. I like his YouTube channel. I was actually surprised
It's
when
great, yeah.
he made that YouTube. Uh, was it $250,000 invested in Misty? I almost
He's at 350 now.
350 now. So he's got conviction. He
Yeah.
has to. I guess he doesn't have a choice anymore, does he? It's either go for it all or. But you know what? You know who else has conviction
Go
in
big or
Misty?
go home, right?
Yeah, is Adriano. Adriano's got conviction in Misty. He still likes it.
He buys every week.
Yeah, I don't have. I mean, I think I'm not opposed to Bitcoin. I
I think
used to buy
at your age, I don't think if you have convictions, don't go in a single sector, like something like a commodity. By all means, do that, but you need to. But especially at your age range, at your age,
Yeah,
age
it's
tolerance, it's probably not the best idea to go too high.
no.
But a small allocation.
There's
play
safer
with it, by all
investments out
means.
there. But I think
Yeah, exactly.
what I was going to say is if you have conviction in the underlying, if you think MicroStrategy is going to do better because of Bitcoin, then hold. Now's the time to accumulate because
Load up.
load up. I mean, it's like $5, right? Just over
Gary
$5.
says Gary says it's a value play now, right?
Yeah, it's a
I
value
think you
play.
may be right. Yeah.
Yeah. He's
There's not much. There's not much further down it can go. So only up. Only up from here.
Yeah, he's looking at it in
You
the
don't think
lens
it's gonna
of
fall to $1?
It all depends on what MicroStrategy does. It all depends on what
Yeah.
Bitcoin does, right? If Bitcoin crashes to $40,000 US, then he could be in trouble. But I can't
Hey,
predict that.
by all means, this is like, do not feel bad for him. This is he's doing this just for YouTube, and it's his play money, so
Right. Well,
he's fine. He's completely fine, even if he loses it all. So he's just
Yeah.
doing it for YouTube. Come on,
that's great. Good for him.
yeah.
but that's not the portfolio that he's trying to make go to $1 million, right?
It is.
It's a separate
That's his
one?
public. That's his only public portfolio that he's showcasing on YouTube. Well, for his $1 million club, right?
Yeah, but I thought he has a separate $1 million club portfolio. No.
No, that's. This is his main.
Oh,
portfolio,
wow.
$1 million club.
He
portfolio,
said
yeah.
he gave a time frame for that, right? He wants
Yeah,
to
he wants to do. He wants to reach that $1 million within 3 years.
3 years. Okay.
hmm
If I can triple
he
my
actually
portfolio,
yeah.
if I can triple my
Sorry, Chris, go ahead.
portfolio in just under 2 years, he can do it in 3. No problem. I have no doubt.
There you go.
Yeah.
He's
Well,
a better
he's
investor than I
probably
am.
done something similar before with his value picks.
Oh yeah,
Yeah.
Yeah. Yeah.
this is like repeat for him. So I'm actually. Let's see how it goes, right? So
Yeah, your portfolio is doing great, JJ. Just looking at here. Good for you. At 23 years of
it's
age.
fine. It's fine. Could be better, but
Oh.
hey,
No,
Anything
congratulations. Congratulations
Oh,
to the
thank
both of
you.
us.
I'm actually thinking of making a small change, or not a change in my portfolio for my RSP. I'm thinking to go more on the hybrid route and actually probably just slowly convert them to all QQQL.
do you have
Oh,
a
yeah?
lot in your RSP in comparison
don't
to your
have
entire
it.
portfolio?
Sorry, what is?
Do you like is your RSP balance overall like a big portion of your entire portfolio, or what is it at
No,
approximately?
not really. No, I wouldn't say that.
You think going 100% into the Nasdaq right now is the right call, Leon?
I don't. I'm not a big fan of market timing, but like over the long run, I believe that Nasdaq has a lot of room to grow, and like with the added 25% leverage, it's gonna just amplify the returns, right?
Right, right, right.
And I'm fortunate enough where I have time on my side since I'm 25, and so I can hold through several crashes if need be.
Yeah.
but I'll still probably come up on the other side, because like with all the previous crashes, right, we're still like with levels, multiple levels ahead of the game. If you look at like past performance of Nasdaq and so on.
Yeah. Yeah,
Um,
I forgot you guys are still relatively young. You've got time on your side. You've got 30 to plus
yeah,
years to be
I
in the
I
market.
wouldn't
So
recommend the same thing for anyone, like just blindly. It needs to depend on their own situation, right? I actually really like HEQL, which is the more diversified, which is like the total equity, right? So it
Yeah,
has like the
all around the world.
Nasdaq, S&P 500, Russell, TSX 60, so on. But for me, since I'm young, I want to go into tech.
no, good for you. No, that's great. When the time comes that I need to get back into passive income investing, some companies that I really like Tap Alpha. I held TDAC and T-SPY. I see they just come out now with a leveraged version of TDAC and T-SPY now. So I'll be
Yep.
interested to see what that does. Huge fan of NEOS, QQQI, I've held those and made good money on those. Goldman Sachs, GPIC, GPIQ, GPIX, the S&P and Nasdaq. That's another two other good funds that I would invest in at this point if I needed income. What's we got? NEOS, Goldman Sachs. We've got Tap Alpha. There's another one in there that I'm missing. I'll remember it. But those three, I would definitely get back into. And then the Daymax on the Canadian side, the Daymax series funds, I like those. And Harvest, HHIS, I think it's pretty solid.
hmm
I don't know if I'd ever get back into a single stock ticker.
I don't think it's worth the hassle, like the
No.
brain power that you need to maintain.
Yeah,
Yeah,
once was
because
enough.
it's I mean like depending on if you want to, right? So
Yeah.
the thing
Well, I
is,
feel
if
like
you want to go into
excitement.
single
Feel like
tickers,
excitement.
then you need to put in more energy.
I just found it too
Hey,
stressful.
right?
I mean, I just, after a while, uh, making $152,000 a year sounds great to your viewers, and
Yeah.
$12,000 a month in income sounds great.
hmm
But if
Can
you
you
don't
spend
have
that though? That's the thing.
no, yeah, if you don't have the stomach to watch your portfolio go up $12,000 one day and then crash $13,000 the next. I mean, when I was investing in passive income on my relatively small portfolio, the most I ever lost in one day was $17,000. And that's tough. Like that's not fun to watch. And I mean, and then the most I ever made in one day was $15,000. So I don't know how some of these people with these $1 million portfolios do it. I mean, you look at Johan, who's got a $5 million portfolio. He's big on
hmm
Avgo, AVGO. He's big
Broadcom,
on
yeah.
Broadcom. Yeah, he's big on blocks, right? But
Yeah.
you look at he posts some of his wins and losses per day. He has to have strong conviction. I mean, he could be down. I think the one post he did, he was down like $800,000 in one stock, just in one day. I'd have
Oh
a heart
man.
attack. Can you imagine? I mean, good for him. It's great. He's got a $5 million portfolio. So um, uh, that kind of portfolio would not be for me. No, I'll tell you that right now. But more kudos to him. He has conviction in his portfolio is doing wonderful. He's over
Mhm.
$5 million, right? So he's doing something right.
Yeah.
Hey,
So
conviction is for the strong, not for the weak.
yeah,
So
absolutely, yeah. Uh, what is it? We've been on for an hour and 15 minutes. Can you believe
I think
that?
that's pretty good, right? So I think before we wrap up this first session, because obviously we'll have a continuation at some point. Um, are there any sorts of modifications you are thinking of doing both in your margin account and your overall account that you're thinking of looking at?
Um, well, I started doing some modifications to my margin account
Mm-hmm.
on Friday. As I said, I
Okay.
reduced I reduced. I sold 500 shares of HHIS and 500 shares of ENCL, which brought down, my margin balance by $10,000, and it lowered my margin requirement. I was sitting a little bit over 55%. If I look, 55% margin. I still have. I think I'm doing okay in my my margin health is good. My maximum buying power in my margin account is 141,000, and I still have $45,000 worth of margin that I can invest. So I'm somewhere in the middle. That line that it gives you about what you can invest in your margin account, margin available.
Right.
So that line is a little bit to the right of center. So I'm about 55%.
That sounds about right. Yeah.
Yeah, I don't know if I'd want to go any more than that in case, but I'm a long way from a margin call. And that's one of the reasons why I picked the steady performers in my margin account, like the Utes and the bank and the HHIS and the ENCL. Those ones have predominantly in the past traded within a well-defined trading box, paid excellent distributions, and you don't get too many surprises with those ones. Let's just put it to you that way. In my main portfolio, I think I'm starting to lean. I did sell my XDiv off on Friday. I had about 35,000. My XDiv by iShares. I had about $35,000 invested in that, and the income was okay. It wasn't anything spectacular, and I put some of that money back into resources, silver miners, gold miners, silver shares. I put that money into the resource, taking a little bit of a chance because the resource sector is volatile. But I have conviction in what I think is going to happen over the next 2 to 5 years, especially with silver, but the gold and silver market. I posted, if you look on Blossom, I posted a YouTube video today of an analyst talking about he sees gold at $8,000 within the next 2 years. It's at $4,500 now. And he sees silver at $400 an ounce in the next 2 to 3 years, due to the factors that we talked about before: industrial demand, shortage supply. People are starting to physically ask for their silver, the physical commodity instead of paper, right? They're asking, and it's just it just isn't there. There's a shortage of silver, and so I think silver is going to do really well over the next 3 to 5 years. I have conviction in it. I think it's just getting started. For anybody that's on the fence about investing in commodities, I say do your research, talk to people before you do. Follow the people that on Blossom that know a lot more about resources than I do, and you'll make your own decision. I'm comfortable with having 30 to 40 to 50%, 40% commodities in my portfolio right now. I think over the next 3 to 5 years that'll do really well. So I'm happy with that. And the rest is in growth. The 3 core are VTI for total world, total stock market. I've got VXUS, which is total international, and then I've got AVOV, which is a little bit of a risky play for me, but I like what Avantis is doing, and I think small cap. I think the next couple years is where small caps are going to shine, and the Russell has outperformed the other 2 indexes over the last little while. So I think I may be onto something there.
Is AVUV basically a concentrated version of the Russell 2000?
Yeah, I'll show you. It's not about.
That sounds about right.
It's Avantis. I'll bring it up for you here. It's the Advantis Small Cap Value ETF. I really like what they're doing. If you go to their website, there's a lot of science involved behind their picks, behind their funds, their factor tilt investing. This one that I'm in is the small cap value ETF. It's done really well for me. I've made money on it. I'm up over 7% since I got into it. So I really like it. Those three, VTI, VXUS, and AVIV are kind of my core. That kind of handles that kind of, my core growth ETFs. And then I've got my resources, and then I've got my passive income covered calls for my margin, looking after my interest. So
That's nice.
you've got everything covered.
That sounds solid.
I hope. We'll see how it goes.
Yeah. Well, I had one question. Like, you travel a lot for work, or
I do.
And so how do you manage your finances now? Like, is there a lot of automation, or
Yes.
how do you do it all?
So you're right, JJ. You're right, Leon. I should have mentioned that earlier. I do travel quite a bit all over North America. So I have money coming out of my checking account that goes into my tax-free savings account every Friday. So that's automated. I don't have to do anything about that. That comes out. It's $500 a week. Right, so $500 a week gets transferred from Wealthsimple, goes into my TFSA, because I still have some catching up to do with my TFSA. So I don't have a $7,000 limit per year. I can go over that. So I do $500 a week into my TFSA. I don't contribute anymore to my RRSP, because
I would say if you're an independent business owner, don't you bother using your RSP. It's not
Right.
worth it.
yeah.
Yeah.
Yeah, I want to max out my TFSA first. I think that's a wonderful
Because you're
account
not
for
going to be
Canadians.
getting because you won't be getting those tax benefits had you were in as a regular 9 to 5 employee. So in those cases, then maximize your RSP. But as soon as you're an independent owner, as soon as you're an independent business, like you're self-employed or an actual business owner, then RSP no longer are that relevant to you. There's the tax saving benefits are no longer that present. So you're right. Use your TFSA first.
No, I mean if you're a high
Focus on
high income earner and you need the tax deduction, that's great. But RRSPs are just tax deferral. It's just a tax deferral machine. Right?
Yeah, exactly.
Right? So I'd rather concentrate on my TFSA, because that is 100% tax free. What you make in there is tax free. What you contribute is tax free. The government will never tax you on that, and so that's my main.
Unless you
focus.
day trade in it. So
Yeah, well,
be
no, I
careful-
don't do
be
that.
careful of that.
No, I don't do that. No. So, yeah, so that's done every week on a Friday. I find Friday to be. I made a post on Blossom a while ago about that. When I was in passive income investing, I used to do all my buys on Fridays, because I find that a lot of the people that trade in and out, swing trades, they get in and out that kind of affect the price. A lot of times Fridays was a negative day. People selling off for the weekend don't want to hold the funds. I don't know whether that's true or not. I haven't done any research on that, but that's just what I was finding. And so I used to purchase my covered calls every Friday. Have my distributions, my reinvestment of my distribution, because everything I made, $12,000 a month, all got reinvested. And so, and that takes a lot of work. I don't miss it.
Yeah.
I don't miss that. No. But yeah, so and then I'm comfortable with my core holdings in my portfolio that I really don't have to look at them every day. I mean, I'm on Blossom every day because I enjoy it, but I really don't have to tinker too much with my portfolio anymore now that I've got a good basis, a good base. If I see a great deal in some of my holdings, I won't hesitate to add to them. And if I find that they're not doing what I think they should do, I have no problem selling them. So getting rid of them. There's so much out there. So
All right, that's solid.
good.
I think any last insights that you want to share with us and with the audience, Chris, before we wrap
Well,
up?
I just want to say to everybody, thank you for joining. Thank you for showing up and joining. This wasn't
It is
supposed.
accidental live.
This wasn't
It's
supposed
just
to
a
be-
recording.
This is my first podcast. It wasn't supposed to be live, JJ. But that's okay. That's all right. Go big or go home, right?
Yeah, exactly. Just do it.
I'm happy. I thank you guys for bringing me on here and for talking with me. I've learned a lot from you
Of course.
both, and
Well,
I look forward to further podcasts, live
Yeah.
or otherwise.
well, thank you
Hey,
so much
both,
for
right?
coming on.
Both.
It was, I think the viewers would really enjoy this, very relatable. And yeah, so thank you so much for taking time to come on.
And thanks, guys. And thank you for your patience. I did get everything squared away with my cam and my microphone and stuff like that. So
Hey, it sounds great. So you're no worries about that.
do it. Okay, perfect, great.
Yeah.
I look forward to the next one then. Thanks, gentlemen.
Yeah.
All right, audience, let's wrap up. That's it. Our third episode of Beyond the Paycheck. And so have a great evening for the rest of y'all. I gotta go eat because I'm starving. But
Yes,
Bye-bye.
it's past my bedtime.
all right, take care, guys.
See you later.
Don't leave. Don't leave. I'm just gonna stop.